welcome back. Specialty chemical manufacturing startup Scimplify has raised $9.5 million in a Series A round led by Omnivore. Founded in 2023, Scimplify offers a science-first, end-to-end contract manufacturing platform for agrochemicals, pharmaceutical APIs, and flavors and fragrances. With this new round, it plans to double down on its R&D capabilities and add more geographies. For more on the funding round and the company's growth roadmap, I have with me its co-founder, Sachin Santhosh, and also with me is my colleague, Arundhati. Sachin, welcome to Startup Street. Thanks very much for your time here. Start by giving us a very brief sense of what Scimplify does in simple terms, and what is the size of the opportunity that you're chasing in the India market?
Sure. Thank you so much for having me. So I'll tell you a little bit about Scimplify first. So Scimplify is a science-first specialty chemicals manufacturing platform, which means that we are a full-stack platform. We do everything from R&D to manufacturing to actually supplying the goods to every part of the world. So a little bit of background about how we started also is that my co-founder and I have been spending the better part of the last decade across various manufacturing setups across the country. Specialty chemicals really stood out to us because this is one of those industries where the output is driven by small to mid-sized factories, which have excellent chemical capabilities, but significant capacities are there to increase their revenues. By increase, I mean more than double their revenues over the next 3 to 5 years. So that's where we sort of realized that, while the demand was also coming in thick and fast into the country, thanks to geopolitical shifts, as well as the China Plus One shift, we decided to take a science-first approach by doing our own R&D. So we set up our own lab and got in scientific leaders who develop technologies for key products. And this is what we take as a combination of the R&D as well as demand and global outreach to these factories. And these plants are more than happy to sort of partner with us to utilize these capacities. Overall, the global market is about $800 billion, and the India market itself stands at about $50 billion, half of which is exported to various parts of the world.
Right. And speaking about that, Sachin, how large is your customer base, both in India and outside? And who are some of the prominent names, if you could tell us a few, and at what rate are you growing your customer base annually at this point?
Sure. So we've served about 200 customers so far. And in terms of the number of factories that we work with, we have 30 factories which are actively producing technologies that we brought to them. In terms of the kind of customers, it completely depends on the segment. Primarily, we focus on pharmaceutical and agrochemicals, other segments being industrial chemicals as well as flavors and fragrances. Typical customer profiles on the pharma side, for example, would be people who manufacture APIs and formulations, is where we supply to them. On the agrochemical side, we also have a larger full stack offering where we even make formulations and supply to brands as well. So that's a typical customer profile for us. We've actually served a lot of customers in the first 6 to 8 months of our business within India. But over the last couple of months, we've served customers from Spain to Japan from Taiwan to New Zealand, and we plan to expand that a lot further.
Could you give us the split between agrochemicals, pharmaceutical APIs, and flavors and fragrances in terms of your revenue? And, quick word on the funding that you raised of $9.5 million. What is the plan in terms of deployment when you talk about expansion in new geographies?
Sure. So today, in terms of revenue, I think 50% roughly comes from agrochemicals, about 30% from pharmaceuticals, and the rest is a combination of industrial and flavors and fragrances. In terms of the funding, we have raised $9.5 million, primarily 2 areas of focus for us. One is on the R&D side. We've received really good feedback about the lab and the setup that we have. So we plan to invest in a process lab in terms of scaling up engineers as well as getting more scientific leaders. We're also expanding the infrastructure we have in Hyderabad. And secondly, this market, like I said, has always been operating on 50% of an export customer base. So we plan to build physical presence in all of these countries by expanding to newer geographies.
Right. So expanding to newer geographies also on the cards. But, with shifts in global supply chains moving away from China, how is Scimplify positioning itself to capitalize on this trend? And what challenges do you foresee in scaling your operations globally at this point?
Yeah, I mean, absolutely. The customers today, if you look at developed countries or as we call it, regulated markets, they are looking for a partner who can give them. So we map out manufacturers across the 3 C's is what we call it: chemistry, compliance, and capacity. So a manufacturer today, if let's say an innovator in the US is looking to find a manufacturer in India, it would take them 6 to 12 months to identify a factory, audit them, and to actually start the first batch of production. What we enable for them is a quick, fungible manufacturing setup, which can get get them to market in less than a month, and which is what we enable across key APIs intermediates. And as markets are moving faster towards, let's say, off-patent molecules, it's an interesting time that we live in. We have more than $200 billion worth of products that are going off-patent in the next 5 years. And India's strength has been off-patent molecules manufacturing. So what we enable is them to is for the customer to find the right partner to let them go to market in 1/10 the time possible, possibly.
Well, I know you only started in 2023, and I don't want to keep beating about the financials, but in terms of the projections, because you're just starting out with a smaller base, what sort of growth do you envisage? And, you gave us a rough split of the key segments from which the revenue is coming. Which one is growing faster than the other? And, what does that mean in terms of your bottom line?
Yeah, I mean, pharmaceuticals has been growing the fastest for us right now. Quite excited about that segment myself. I think right now in the last 8 months or so, we've seen our revenues grow 10x. This year, we are planning to exit at about a $50 million ARR. And in terms of profitability, actually, we were really close to profitability before we closed our Series A. But like I said, with all the factories and the customers that we were getting in, we decided to sort of double down on this. And we see that, within the next 10 to 12 months, we will be reaching a much larger scale with profitability as well.
All right, Sachin, we're completely out of time on the show, but thank you so much for joining us on Startup Street today.
Thank you. Thank you so much for having me.